What's going on, everybody? It's Jeff here. Welcome back to the channel. What a seesaw day in the market today. The market took a big hit yesterday after the Fed minutes were released, hinting that they would start their asset tapering a little bit earlier than expected. Spooked investors a little bit, even though we knew the tapering was coming. Because we know what the Fed's plans are, I want to talk about where I see the market heading in the short term and in the long term. We're going to take a brief look at history as well. And I want to also give you some ideas on how to invest going forward. The second thing we are going to talk about is what happened with AMC stock. We're going to dive right into it, but let's talk a little bit about the overall market. First, take a look at the 5-day, 5-minute chart. As you can see, was pretty stable for a few days. As soon as that was released, massive sell-off to a quick regain starting out the intraday, then leading to just a little bit of choppiness. Let's take a look at this article right here, and I want to really point out the headline because it's very important. Markets already have started adjusting to the Fed's expected policy tightening. We've talked about the $120 billion of asset purchasing that they would need to start slowly tapering before they raise interest rates in order to fight some inflation. Now, there's one thing that is very, very important that the Fed is doing, and I want to highlight when you take a look at the overall market. We'll jump over to the 1-year, 1-day chart on the SPY. There's one thing that I've learned investing in the market is that they don't like anything, investors don't like anything that is going to rock the boat. That means something that is unexpected. That's why the Fed has done a really good job at laying out what exactly their plans are. Now, the plans are going to change because, like I said, their future plans, they're going to change, but at least giving investors an indication that tapering will begin. Then we will raise interest rates, leaving investors a clear path on what is expected to happen. If you look back to 2008, the insane crash that we had, that was very, very unexpected. They didn't see the mortgage-backed securities crashing like they did very quickly. If you look back at what happened in 2013 as well, they call it the taper tantrum. That was also something that was very quickly unexpected announced that led to a massive sell-off. And then lastly, for all of you new traders, take a look at what happened in March of last year. Immediate lockdowns happened almost overnight, something that never happened before, very unexpected. So as the Fed is continuing to give investors a clear path on where they see the road headed, is going to give a good direction on how investors are going to invest. And that doesn't mean that the market is going to crash. That doesn't mean that it's not going to at least have a little bit of a correction. Corrections are natural. Take a look here. As you can see, I've had this chart up for now probably almost over a minute. You can see the numerous touches at the 50-day moving average. I even announced to everybody in the group today, I had a little bit of a water trouble for all of you that live in Connecticut. We got a massive amount of rain in a very short period of time. Had a little bit of water trouble early this morning, but I had said I don't expect the sell-off to last. So all of you guys that had shorted SPY or entered SPY puts, make sure you try to close them. I don't expect it to last. And the reason being is because this is not something that's unexpected. It's news that we knew was coming. That might be happening a little bit earlier, but it wasn't unexpected. Does that mean that SPY is going to continue to run to all-time highs? No, I think that as the asset purchasing begins to taper and they slowly raise interest rates, the market will continue to get frothy. The SPY is definitely overdue for that 10% correction territory, which it has not hit since March of last year. The NASDAQ did back in February of this year, and the SPY is a little bit overdue, especially being in the second year of a bull run. I do expect it to still see a bit choppy, and we still see some all-time highs begin to happen. So what does that mean going forward? Just be very, very vigilant on the plays that you enter. If you see something that is already running up, don't chase after it. Those easy money plays like we had in December and January of last year are not the type of plays to invest in. I want to talk about this one right here that I announced. This is Lowe's. I announced this in a group that they reported positive earnings, and it was an easy $12 to $13 gain very quickly. A very, very good fundamental stock that is going to do very well in any type of market, especially had an amazing 2020 year and 2021 because many individual homeowners decided to do upgrades to their homes, as well as their entertainment, travel, leisure, restaurants were kind of hindered in those activities. So they decided to spend lots of money upgrading their homes. But I announced this play. It was a phenomenal play to get in. And like I said, it was a 10 to 15% runner in, yes, it could have been a day, even over a longer period of time is a very, very solid gain. You don't have to chase after these high runners that are already starting to run, just to give you that. Okay. Also want to point this out when I talk about the fact that you should be very, very short on your plays is the fact that the Fed reverse repo, the amount of capital submitted to the Treasury is continuing to increase. I think this is their seventh time over $1 trillion, and it's a 1.1 trillion. It continues to reach all-time highs. It just means that these large institutions do not have faith in long-term investments as of now. So just be very vigilant. If you see something run out and you had your eyes on it, don't go chasing it. There's always another play. Trust me, I talk about the morning flush that has been phenomenal happening. If you look at what happened with SPY today, I'll jump back really quickly to the 1 minute chart just to give you guys an idea of exactly what a morning flush is. You take that right away, ripping right out of the gate, showing signs that really early pre-market after 9 o'clock that it might show signs of bullishness, rip right out of the gate. Those very small plays, those small gains, those quick plays are going to be great ways in order for you to continue to grow your portfolio in times when all stocks aren't just ripping up like this. There are also other numerous different moves you can play. If you're interested, come check it out. First link in description. There's hours and hours of different training material just to give everybody a different idea of how to be profitable in any type of market. Okay. Lastly, let's take a look at what happened with AMC. As you can see, that flush rip right out of the gate. Heavy shorting happening all day. I think they tried to take a little bit of advantage of just a overall market scare, market sell-off to really capitalize on doubling down on their shorts. It's going to be interesting when Ortex starts to report this. When we take a look at the 1 day or the 1 year chart, the daily on the 1 year chart, as you can see right here, I talked about this $37, $38 level needing that clean break. As you can see right in here, this is a double top, known as a double top, and it came back. But in the short term, this is what consolidation is. Whether we're up $5 or $6, down $5 or $6, it's exactly what's happening. We're bouncing between the 100 and the 50. It did look like a nice curl coming in here. We didn't get that breakout. I said we needed to get that confirmed breakout before a new trend would happen. But right now, everything is still just consolidating. As much as I want to continue to talk about everything that is happening with AMC, like I said, it's just a natural consolidation that is continuing to happen. There's been no breakouts. There's been no major changes. None of all of our, due diligence by numerous people has changed. I've slowly watched individuals even on Twitter, on Reddit, and on YouTube as well, stop having to continue to cover the same knowledge because the play still stands. And unfortunately, all we can do is continue to wait and have faith and conviction that all of the research that we have done is going to play out in our favor. I will continue to keep you posted on any changes, and as soon as there is a breakout in any direction, you will be the first one to know. That's it for this video. I'll see you in the next one.